According to Direct Line, one car gets written off every 90 seconds in the UK, which is a bit of a shocking statistic. And in 2022, the FCA actually warned motor insurers not to undervalue car write-offs due to the number of complaints they received from people that weren't happy with the write-off amount they received from their insurance company. Now, 1.1 million people in the UK, again according to the FCA, take gap insurance, and I thought it's worth a deeper dive into this. It's often sold by motor dealers, by car traders, and let's have a look at all the different options and see if there's not a better way to go about buying it yourself. Now, quite often if your car's written off, that leaves you with either a debt or a shortfall in money that you need to basically get from somewhere to either pay that debt or to get another car of the same sort of standard. Gap insurance is an optional multi-year insurance that covers that gap. So the amount you receive from the insurance company and the amount you require to either settle your finance or get a deposit for another car or whatever it may be. There are several different kinds of gap insurance, so we're going to have a look at those now. So I'm just popping this graphic up on screen for you. It's from Car2Cover, who are a leading provider of gap insurance in the UK. And it just shows you the different kinds of gap insurance that are available. Contract hire, by the way, is a different way of saying car leasing. So whenever you see contract hire, just think car leasing. So as you can see, there's one type of gap insurance that's specifically for car leasing. It's called contract hire gap insurance, a low-cost gap insurance specifically designed for contract hire and leasing agreements. If you suffer a write-off and your motor insurer doesn't pay enough to clear the lease, this policy will step in and settle your debt. If we move over to hire purchase and PCP, the top one there's called finance gap, and that's basically designed to just cover any debt after your car's written off that you might owe to the finance company. So let's say, for example, you owe the finance company £20,000, the insurance company only pays you 17. That gap insurance, that finance gap, would pay you the £3,000 difference. Then we've got return to invoice gap. What that does is it tops up the amount that your insurers pay back up to the price you initially paid for that vehicle. If your finance settlement figure's less than the price you paid, you keep the difference. Then we've got vehicle replacement gap. That tops up the amount it paid by your insurers to the price you need to pay for a replacement car. And again, if that finance settlement figure is less than the price you paid, you keep the difference. So the final one under PCP and HP is called top-up gap, and that gives you a fixed percentage increase over whatever the insurers pay out. So let's say the insurers pay out £20,000, that would give you 25% potentially on top of that. Now this is the one not so many people are aware of. It's called non-finance gap, and that's where you can take out gap insurance even though there's no finance agreement in place. So you could have paid cash for a car, you can still take gap insurance. And again, we've got return to invoice, we've got replacement, and we've got top-up gap options available. So the return to invoice cover will top up your insurance company's write-off payment to you back up to the price you paid for the car. So if you've paid £20,000 for a car, you've had it a year and a half or something, and it gets written off, it's going to cost you a lot more than that insurance payment to get yourself into another one. This will actually give you what you paid for the car in the first place. Secondly, we've got vehicle replacement gap. Once again, that will cover the difference between the write-off amount and getting you in another car of the same year, same spec, same mileage, all that kind of stuff. And then we've got top-up gap again, which again will be a fixed percentage amount on top of the amount that the insurance company pays you. So the other thing to mention is that with the finance gap insurances, so that's the contract hire or car leasing one, the gap insurance would also pay a sum equal to 3 monthly payments. So for advance rentals for your next vehicle, which could come in very handy, couldn't it? Gap insurance is so important because all the insurer pays in the event of a write-off is their sort of written book value for the car. And that often is nothing like the retail price of a car. It's that thing of kind of trade value versus retail price. They can be very, very different. But if you've bought that car, and particularly if you've bought it on finance, the car owes you something straight away, and perhaps you owe someone else for that car. And the gap insurance is literally there just to bridge that gap and make sure you're not left out of pocket in the event of a write-off. Without gap insurance, if you take a car on any kind of finance or indeed buy one, you may have lost a decent chunk of your initial investment, and indeed you might have a debt on top of it if you're on a finance agreement. So imagine taking a PCP on a car and you've lost your deposit and you still owe some money on the top, and you've lost your car. Now, the really important thing with any kind of gap insurance is that you buy it as close as possible to the time you purchase the car or lease the car. The quicker you do it, the better. And indeed, if you try and do it too far after the event, you won't actually be able to buy the cover. Or if you do, it will be at an exorbitant price and might actually have some caveats and things that mean the policy won't deliver as much value for you. But most gap covers need to be bought fairly quickly following the purchase or acquisition of a vehicle. Premiums are worked out based on the P11D value. So P11D is what they use if you're paying company car tax. It's basically the official sort of book price of the car plus any extras that are on it. Also the period of the lease or period of the finance arrangement is part of the calculation. And thirdly is how quickly the gap insurance is requested following your purchase of the car. You can even get it sort of slightly in advance, I believe. And interestingly, the price is often less than the price it might be to, insure your new iPhone or something. And when you consider the amounts of money on offer, you're looking at potential claim for £1,000 or something for a new iPhone versus potentially several £1,000s on a gap cover claim. It seems like reasonable value if you buy it from the right place. And this is where we get on to the interesting bit. Gap cover is often purchased and sold at car dealerships and through car dealers and through car salespeople. And one thing I can tell you is that most add-on products being sold by car sales folks, dealerships and what have you, perhaps don't offer the best value, okay? Because obviously there has to be margin in it for the salesperson, there has to be margin in it for the business they're working for. And of course, do you trust a car salesperson to advise you on financial products and insurance products? And financial insurance products, I don't, all right? Whatever course they've been on and whatever else, I would rather have it dealt with by a qualified insurance broker, someone to whom the FCA rules are very, very familiar, and someone that is under far more scrutiny than a car dealership might be for these kind of things. I'm not saying don't go and buy it from a car dealer. I'm saying seriously consider if you want to buy it from a car dealer or not. Now, I've just partnered up with Car to Cover, okay, who have helped me make this video, and Car to Cover are fantastic, really nice people. You're not dealing with call centres on the other side of the planet, using A-rated insurers, which is very important. Not everyone does that. They've got decades of experience in gap insurance from an insurance broker level, and indeed some car dealership experience as well. So there's a really good blend of experience in the business. They've got a wide range of policy types and cover types, and being specialists in this field, they've managed to negotiate some really great terms that are much more customer friendly than you might find elsewhere. And due to compliance reasons, you can never say that you're cheaper than X, Y or Z, but I would say that I've done a little bit of research and I'm very confident in their pricing. They also do multi-policy discounts. They do things like alloy wheel cover, they do scratch and dent cover, all sorts of ancillary car products that might be of particular interest to you if you lease your car or if you take your car on any kind of finance agreement. I've been on the website and run through a couple of quotes. I'm going to do one in just a second actually, and I've been really happy with the prices. They've also given a discount to viewers of my channel. If you quote Jim10 when you're on the phone to them, they'll give you £10 off any purchase, and they do multi-policy discounts, so it's possible to get up to £45 off if you have multiple policies. And then if you quote Jim10 as well, you get another £10 off, which is not too bad, especially as the premiums are not huge. I think it's a really good deal. So I'm just going to do an example quote in a sec, but in the meantime, if you're looking for a gap insurance quote, either go on car2cover.co.uk or call 01438 870 615. Right, let's jump on the website and grab a quick quote if we can. If you'd rather just have these guys give you a call at your convenience, click the link in the video description and it will take you to this. It basically gives you live access to their calendar, and you can say go to this day, that time, and just book a 15-minute callback, and they'll say here it's got you the £10 not a guru discount, and there you go, jobs are good, and they already know who you are and what you want when you speak to them. So let's go onto the website, Gap Insurance, quick quote, and we'll say, are you an existing customer? No. Type of vehicle, car. Purchase price of the vehicle, let's say, I don't know, let's say it's a £25,000 car. Car's brand new, vehicle's current recorded mileage is nothing, expected delivery date is today. Vehicle supplied by a leasing company, all right? So leasing company, all on contract hire or lease. How's your vehicle acquired? Contract hire or lease. What will you be using the vehicle for? Social, domestic and pleasure, to and from place of work. What's your annual motor insurance premium? It also asks, you think, why are they asking that? Some Gap Insurance quote take into consideration the amount your motor insurer charged to insure your vehicle. This way, we don't need to ask questions about no claims bonus, previous claims history or driving experience, etc. Whilst the exact figure is not necessary, make sure you choose a correct answer from the drop-down list. So there you go, you just need to be in the rough ballpark. So we'll say we pay between up to 500 quid for the car insurance. Manufacturer of the vehicle, we're going to say is Vauxhall. Period of cover required. So most people do a 3-year finance arrangement, whichever one they go for. On my lease deals, we always look at 3 years, so we'll look at 3 years here. When would you like the policy to start? I'll be choosing a start date that's within 90 days of the vehicle delivery date, lower premium, or for a higher premium, I'll be choosing a start date that's 91 to 180 days after vehicle delivery date. Now, that's just to show you that if you're trying to buy this 3-4 months after you've got the car, it's going to cost you more money. I always suggest you get this when you get the car, and that's going to give you the best premium, and it's going to give you cover for a longer period of time, isn't it? Monthly lease rental amount including VAT, so we'll say Vauxhall Astra, I don't know, 300 quid a month. Okay, so just filled in my contact details there. Instant on-screen quotation. This is for 3 years cover on a £25,000 car that you're paying 300 quid a month for. Is 147 quid. Now, during this process where I've been looking at potential different sponsors and speaking to 1 or 2 companies, I've seen that price at 500 quid before. This is 147. I'm not saying that you should go with this one because I'm telling you to. To me, their prices seem very good, and to me, their cover seems good, and I like them as people. So there you go. Read what you will into that. Now you can get them to email the quote. You can click buy it now, add more products and view multi-policy discounts, and then you've got the additional benefits. You've got all the documents here, your policy document, your IPID, your demands and needs statement, everything's there for you. But if you want that £10 off, give them a call, 01438 870 615. Go through it on the phone and you'll get a tenner off. Or as I said, click that link in the video description and get them to call you back, and they'll immediately knock that tenner off, which means you can get that for 137 quid for 3 years peace of mind. I don't think that's too bad at all. Just while we're on the website, you can see the other things they do here: scratch and dent insurance, alloy wheel insurance, tyre insurance, paint and upholstery treatment, low cost car and van insurance. So there's plenty on there, and hopefully a few more things to come in future as well. I've also done a blog post on this because as I ramble on in my videos, you may have missed some bits, I may have missed some bits. So it's quite a comprehensive blog post here. You've also got that infographic that I showed earlier in the video, so you can really kind of read a bit more about gap insurance, learn about the differences, why it's important, and really why you should consider buying it from a broker rather than just taking whatever the car finance company offers you. Thanks ever so much for watching, guys. I look forward to seeing you on the next one. Bye bye.